If you are a UK tax resident self-employed person or running an existing limited company here in the UK, then creating and operating an offshore company may be something you have heard about and considered. But the key questions are, what is an offshore company and why would you want one? In this video, we will cover what exactly is an offshore company, why as a UK resident would you use an offshore company, how are overseas offshore companies treated by the UK tax authorities. Before I get into today's video, be sure to hit that subscribe button as well as the notification bell to make sure you're kept up to date with all of our latest content. This really helps us to produce more helpful videos and to get you real quality advice from real qualified accountants. Unfortunately, the very word offshore has received considerable negative publicity over the years, particularly with regards to aggressive offshore tax avoidance schemes that seem to have been prevalent in the media. But there is a difference between an offshore company and an aggressive offshore tax avoidance scheme. The latter should not tar the former. Now, make no mistake, offshore-based tax avoidance schemes are to be treated with absolute caution. And if you want to find out more about this concept, we have done a useful video that explains by clicking on the card above. So the fundamental question is, why would you want to create and run an offshore company and what could be the benefits to you? But before we address this question, let's have a refresher on what exactly an offshore company is. From the perspective of a UK resident person, if you are a shareholder of a UK-based limited company, then the company itself is a separate legal entity to you as an individual and is deemed to be a UK resident company for tax purposes. A UK resident company is subject to UK corporation tax on its worldwide income and gains. An offshore company is simply a non-UK resident legal entity. The offshore company can be based anywhere outside of the UK, for example in Ireland, Hong Kong, Dubai, India, the Cayman Islands, or anywhere else in the world for that matter. And quite often when the term offshore company is mooted, you will probably automatically think of a low tax or tax-free jurisdiction. But having an offshore company does not necessarily have to all be about paying lower taxes, as we'll explore in the next section. At the beginning of April, we granted early access to the Accounting and Tax Academy membership site. In July of this year, we're opening our doors to everyone. Our members will have access to in-depth tutorials, free downloads, and exclusive discounts. And the best part is, it's absolutely free to join. Head to the link in the description box below to register your interest today. Achieving lower taxes is perhaps the #1 reason why you would opt to create and run an offshore company. And there is absolutely nothing wrong with this motive. After all, tax avoidance is legal, so long as you fulfill your reporting and compliance duties in the relevant jurisdiction. However, there are various other holistic reasons why you could create and run an offshore company. These include, but are not limited to, #1, living a nomadic lifestyle, perhaps as a telecommuter. #2 is to gain access to and the ability to recruit local talent in offshore markets. #3, to gain access to certain supplies in offshore jurisdictions. This is quite prevalent in India, for example. And #4, to purchase real estate in certain countries that will not allow or severely restrict foreign ownership. However, it's not always easy just to uproot and live a nomadic lifestyle, particularly for those of you who have roots here in the UK, such as family, children, and your main residence, just to name a few. Despite some of the tax rates and the weather, in my personal opinion, it is generally a great place to live. Now, let's remind ourselves an offshore company in itself is quite different from an aggressive offshore-based tax avoidance scheme, which quite often is contrived with the sole aim of avoiding, if not bordering, tax evasion. Running an offshore company in light of an objective to lower your corporation tax bill is a perfectly legitimate way of operating. However, there are certain rules in place to prevent running of an offshore company as more than just an elaborate aggressive tax evasion mechanism. Now, we're not trying to pour cold water over offshore companies and some of the tax advantages that are available to you, but there are some rules HMRC UK have at their disposal to potentially challenge you as follows. #1, ultimately, where the offshore company top-level management and control is established is important. If you are a one-person director owner, then it's pretty straightforward. It will come down to where and how you call the shots for your company. If your business has more directors, management, and employees, then HMRC actually split their assessment into 3 different levels. #2 are the income tax anti-avoidance rules. The detailed provisions of this are outlined in section 720 to 731 of the ITA 2007. And #3 are the apportionment of capital gains tax rules. Now, the first point is absolute key. So long as it can be established and demonstrated that your offshore company is indeed non-resident and not deemed resident, then you will generally benefit from what the offshore company and its jurisdiction can offer. Now, as a shareholder who are the legal owners of the offshore company, you can be based anywhere in the world. It does not really matter. HMRC would apply what is known as the CMC test, that is the Control and Central Management Test. The International Manual has an in-depth reference as to how HMRC would approach a CMC test and some of their methods. There are best practices that you can deploy in order to ensure your offshore company is truly classed as non-resident in the eyes of HMRC UK. And this is a tricky area to navigate, so we strongly suggest you engage with a professional if you are a UK resident or otherwise thinking about creating and running an offshore company. I hope this video has helped you to gain a little better understanding of what an offshore company is and why you would perhaps want to create and operate one, and taking you one step closer to knowing your numbers. As always, let us know in the comments your thoughts on today's video, or if there are any other topics you'd like us to cover in the future. Finally, be sure to like and subscribe, as this does help us to get our content out there. This is Tony D'Angelo for the Accounting and Tax Academy. Thanks for tuning in.